Guys, we'll start the session in next 1 minute. Some participants are still joining in. Good afternoon, everyone. Welcome to today's session of After Hours with William O'Neill India. And before we go ahead, I'd like to give a small disclaimer that any security that we might discuss in today's session should not be considered as a buy or sell recommendation. And we are just doing it for educational purpose. Without taking up much time, I will start with Nifty 50's chart analysis for the day. Look at it, Nifty was very volatile and very range bound as well. So like even with some positive action on the global front in terms of the US markets. Yes, the US markets was beaten down like around 20 to 30% in the last 1 year, but there's been some sharp recovery in the last few sessions, and Nifty is unable to stage a follow through day. We'll discuss more on that in the next slide. And if you look at the today's session, then even today, like from the last few days as well, every day Nifty had a positive opening but was unable to make new highs or probably stage a follow through day as well. Even in the today's session, Nifty made a high of just somewhere above 17,830, 848, then started to slide in a downward trajectory, as you can see. Went to around 17,720, and then made a very late recovery like yesterday's session as well, and closed like marginally below the 17,800 mark. So Nifty has been very range bound in the last few sessions. We'll be discussing that in the coming slide. See, as you can look at in the last 3 to 4 sessions, if you look at this, like initially Nifty was kind of range bound around these levels, around the 50 DMA mark. Then it probably not breached it, probably advanced and reclaimed its 50 DMA. But if you look at in the last 4 sessions, Nifty tends to have a positive or a gap up opening, and post the gap up opening, it's unable to create new highs. If you look at this, Nifty probably having some kind of resistance around these levels, where Nifty is unable to probably advance and move ahead. And probably we are in this RA phase, or the rally attempt phase, where we've been discussing about this for some time now, that we need an FTD. And probably if an FTD occurs, that is an up move of 1.5% on higher, on volumes higher than the previous day, it can be, you can expect some kind of relief rally coming in then. Because probably markets have been beaten down for some time now, and Nifty on the technical front as well has been trading above it's a 200 DMA, and that is this black line, the 21 DMA is green line, and this 50 DMA as well. It's been trending above that. So probably if Nifty stages follow through day from here, probably there can be some kind of resistance near the previous highs around the 18,000 mark, the 18,100 mark. But probably if Nifty is able to sustain those resistance and probably move ahead of those resistance, then probably there can be some kind of relief rally as well. But all of that can be only confirmed, or probably can, I mean, the sustenance of the rally can only come in once probably the follow through day comes in. So the follow through day That is an up move of 1.5% on higher in this kind of market becomes really, really important. So talking about the top gainers and the losers for the day, the most notable gainer was was Maruti, and it declared its results today as well during the market hours. We'll be discussing that in in the latter half of the presentation as well. So your Maruti gained by around 5.6%, Reliance by 3.09, Appolo Hospital by around 3%, NTPC by 2.1, and Hero MotoCo by 1.5%. The entire auto pack, the two-wheelers, four-wheelers, all of them were on a gaining spree today. Talking about the losers, Tech M, Tata Steel, Sun Pharma, Grasim, and DV Slab were the top losers. Tech M the most by 2.5, Tata Steel by around 2.5, Sun Pharma by 2.2, Grasim by around 2.2, and DV Slab by around 2.1%. As I was talking about in the previous slide, only the auto pack was in momentum today. As you can see, the auto was the only sector which probably advanced by around 1.63%. All the other sectors were on a declining spree, even the Nifty Bank as well. The major decliners were your Nifty Metal and your Nifty Pharma, as well your Nifty Bank declined by around 0.8% today. Talking about on the news front, rupee ended at around 82.47 against the dollar against yesterday's close of 82.49. Bandhan Bank's Q2 FY23 net interest income grew by around, that is the NII grew by around 13.3% YOY to 2,193 crores. It reported a profit of around 209.3 compared to a loss of 3,008 crores YOY. Asset quality improved as GNP and NPA ratios improved by 6 BPS QOQ to 7.19% and 1.86% respectively. Satin's Q2 FY 23 NI grew by around 3.2% YOY to 155 crores. PAT surged to 57.2 crore against a profit of 10.9 crores a year ago. So Maruti was probably the most notable result today, and it was a really blockbuster result where probably had beat the estimates, and where the Q2 FY23 standalone revenue increased by 45.7% YOY, 29,931 crores. PAT surged by 334% YOY to 2061.5 crore. EBITDA margins came in at 9.25% from 4.2% a year ago. So again here comes back Maruti, where we'll be discussing Maruti as the chart of the day as well. So before we go ahead and discuss about Maruti, it's not a buy or sell recommendation at the moment, as the market is still in rally attempt, and we will be discussing about certain companies or certain stock, just to probably keep ourselves abreast about what's happening within the market, and to probably keep ourselves updated for when the next leg of rally starts. We can probably have these kind of stocks in our buy watch list, and probably uh, are like completely ready when a follow through day happens. So talking about Maruti, let's probably deep dive a little more into the results as well. So the result was probably a beat on all the fronts except the margin fronts, where margin probably came in line. I mean, on the YOY front as well, it probably the margins expanded like around 505 bips. EBITDA, your profit around tripled and quadrupled, and similarly your revenue grew by around nearly by 50%. So talking about the company, talking about the pending customer orders, which stood at around 4.12 lakh units. Out of the 4.12 lakh units, the new cars, the new recently launched cars such as your Grand Vitara, Vitara Brezza, all those comprise of around 1.30 lakh pre-booking. So which is a really good number. Talking about the raw material cost as a percentage of sales have also gone down by around 390 bips YOY to 76.5%. So even the chip shortages and the other the inflationary costs have been coming down. So that's one of the good signs. So the company also says that the shortage of electric components impacted the production by about 35,000 vehicles in Q2. So there is still some kind of uh, um, um, supply side concern there, but that is easing out. I mean, that's what we can see, and going forward we can see these tensions to probably ease out for the company, and the company can probably give out better numbers um, in the near future. So probably relatively better sales and relatively better sales can lead to improvement in capacity utilization, as well as cost reduction, and improved realization is expected to boost the company's margin performance as well in the coming time. Talking about the O'Neill front, if we talk about it, the stock is slightly extended, like from the pivot, like we usually talk about 0 to 5%, it's 0 to 6% now because of today's move. But as you can see, this RS line has been moving higher, which is really good sign. And even when the stock consolidated in the last few sessions, it consolidated on really low volumes, which is a really good sign. And then when it probably broke out, or it re-broke out, it was on above average volume. Even the shareholding by funds is increasing, like from 1028 from a few quarters back to nearly some 100 and 150 more funds have probably added Maruti into their uh, fund. And probably similarly, the master score have been improving. The overall your buyer demand has been improving for the stock. Even if you look at the estimates for the next 2 to 3 years for 2023, the estimate, the EPS is expected to jump by around 76%, and similarly by 50% in 24 as well. So overall, if you look at it, it's a really good picture for the company on the fundamental front, and even the technicals have started to improve for the company as well. As you can see in the last couple of days action, and even today's action as well. It's just that probably if the market would have been in a rally attempt, the story would have been much different in terms of adding stocks to the portfolio or not. So probably at this moment we can still study these charts and keep them in the buy watch list, and probably wait that if the market comes from a rally attempt to a confirmed uptrend, and then probably if the stock is in the ideal buy zone, probably one can easily have a look at this stock. So thank you, and that's it from my side. And stay tuned to the space of After Hours as well at 4:30 p.m. sharp from Monday to Friday, and the pre-bell space at 8:45 a.m. Thank you, guys.